Tax deductions, they don't work the same way every time, which is why you need to see this. Over the 12 years now that I've been doing taxes and accounting, I find that many people believe if they have a tax deduction of, let's say, $5,000, that they're going to also be able to get a refund of $5,000. This is why this is one of the top myths or misunderstandings when it comes to taxes. This is especially important if you are a business owner or thinking of becoming a business owner in the future. My name is Mike, the CPA. On this channel, we teach taxes and investing. I would like you to imagine with me for a moment that this is your tax return, and on line 15, your taxable income right here is about $65,000. Of that $65,000 taxable income, your tax on line 16, your tax liability is $10,003. But of course, some of that income you've been making is subject to self-employment tax as well. So your total tax liability is on line 24 is $12,102. Now watch what happens to that tax liability if we take those same numbers, but we decide to spend an additional $20,000 in our business before the end of the year, so we get another $20,000 tax deduction. Before this new $20,000 deduction, our total tax on line 24 was indeed just about $12,102. But with the $20,000 tax deduction, now our tax has dropped on line 24 to $7,030. So that $20,000 deduction basically lowered our taxes by $5,072. Based on many people's understanding of taxes, if they owed about $8,000 after withholdings, and they then went and got a $20,000 deduction, in their mind, they would actually get a refund of about $12,000 back. But as you can see from the numbers, it's not quite how it works. What this data is telling me is this tax savings of $5,072, if we divide that by our tax deduction of $20,000, what it's telling me is that roughly for every dollar we spend here to save on taxes, every dollar spent is only going to save us about a quarter in taxes. I really hope you're finding this information helpful so far. If you are, do me a favor and tap that like button. It really helps out the channel and helps this information reach more people. Thank you so much. One of the things I would like you to take away from this video today is know that before you go and spend additional money to try to save on taxes, take a moment and look up your marginal tax rate. And that makes sense though, because if you look at the tax brackets for 2020 for a single individual, which is the example we're looking at together here, the marginal tax rate for a person who makes $40,000 to $85,000 a year is 22%. So therefore, part of their income is taxed at 22%. Plus, they have self-employment tax on top of that, which bumps it up a little bit, and that's why we got that 25% figure that we just looked at a moment ago. Your marginal tax rate is going to help you quickly figure out how much tax savings you're going to get for each additional dollar you spend. For example, if you're in the 12% bracket, an additional dollar spent will save you about 12% in taxes, give or take. Whereas if you're in the 24% bracket, if you spend an extra dollar to save on taxes, it's going to save you about 24 cents. But what happens if my return is showing no tax liability? What if my overall income is negative because my business took a big loss? When you find yourself in a situation where your business loses a lot of money or you have a lot of deductions and you find that you have a total income that's negative for tax purposes, well, that's going to generate a net operating loss. And as the rules currently state, going forward into 2021 and beyond, generally speaking, that loss is going to carry forward for most people. So you're not going to be able to use it now, but you can deduct that loss against income that you have in the future, in a future tax year. So can tax deductions help your refund? Well, we saw that having additional deductions did lower our overall tax liability on line 24, but does it actually help get us a bigger refund? In terms of expanding your refund or trying to get a bigger refund by spending more money to get more tax deductions, likely it's not going to help you. It's called a refund because it's a refund of what you paid in. So in the example we looked at, the person paid in $3,500. So the most they can get back is actually going to be $3,500, regardless of how much additional money they spend to try to get more tax deductions. Now, there are special tax credits like the advanced child tax credits and things like that that are refundable. There are some credits that are refundable, which help get you a larger refund. But if you take those credits out of the equation, if you exclude them from this, then you're only going to get back at most what you paid in. All right, guys. Well, that's all I have for you today. I'll see you down in the comments. Take care of yourself, live life uncaged, and have a great week. Peace.